last year, but on the local, state, and even federal level, government spending is down about the equivalent of about 1.2% of GDP this year from last year. So that is an impact, obviously a large impact on economic growth. But I think that there's also a couple of events that occurred that people wisely assumed would impact the economy mid-year. The first was the Japanese earthquake and tsunami. That disrupted the global supply chain. And most intelligent economists thought it would take about 3 to 6 months for that to impact our economy. You're seeing it now. It's had a fairly strong impact on our economy the last couple of months. Probably will so for another 2 to 3 months. Another factor that's occurring internationally that impacts us very directly is what's called the Arab Spring. You look at oil prices, they've gone up on average about $10 a barrel. Now that translates in anywhere from 20 to 40 cents more a gallon, and that takes purchasing power out of the consumer's pocket. So those events have had a major impact. You've also got the European debt crisis, which has made lenders more cautious as they try to increase their capital base. And then you've got the thing going on in China. You have inflation in China. China's government has raised interest rates 4 times this year. Chinese economy has slowed down 25% year to date. And so that affects the world economy. So we're seeing some things that you could assume were going to happen. The reduction in government spending. You can see the impact of some of these international economic events. I do not think we're going to do a double dip. I think we will continue to have moderate to slow growth. I think the best forecast I've seen is 1.5 to 2%.
So another area, mortgage underwriting, you just mentioned it, it's incredibly tight. Any good news in that you can see? Anything on the horizon? What's going on?
Well,
because it's really, we've got a credit crunch in mortgages.
You know, this is problematic because I was talking to a senior executive, one of the tier 1 lenders the other day, and I asked him about his underwriting standard. And he looked at me in the eye and he said, "Pat, we are underwriting to a level that absolutely ensures we'll never have another foreclosure." Well,
or sale.
that's pretty severe. And I goaded him a little bit, and I said, "What's your thinking on this?" And he said, "Look, we're on the sidelines until the Dodd-Frank rules are written. When the Dodd-Frank bill was passed last year, they left 387 rules to be written by regulators. So far, 1/3 of them have been fulfilled. We have 2/3 of the rules yet to be written. A couple that impact us here in this room is the QRM. What is the definition of QRM? And they're still debating this issue, and until that's resolved, banks won't know how much of the liability they'll have to retain on the loan. The other thing that's impacting them is the capital, the leverage, how much capital they'll have to hold on their balance sheet in relation to the amount of loans they're making. So lenders are overly conservative right now and will continue to be until Dodd-Frank is resolved. My gut is that by the end of the year, you'll have some sort of clarity on the rules. Next year, we'll have mortgage lending being defined and sort of the underwriting process being refined. By 2013, most of the professional realtors in this room will be able to instinctively tell when somebody will qualify for a loan. So
2 years.
I think it's going to take about 2 years until we're back to the point when somebody walks in the door to buy a home and know they're going to loan.
So our fate's in the hands of politicians in Washington.
In a lot of different ways, yes. There's a lot of different ways.